Okay, excuse me. Good morning, traders. Make sure I get up and running. Okay, yep, good morning, right to go. So welcome to TradeSetup and the Morning Playbook for the 9th of June. Okay, Jason, hope we all had a good long weekend. Should be a lot to do this morning, I'd say, with the US was up quite, about 800 points in the Dow, and another followed up with another 400 points last night. So, great into the week, a good start to the week. I don't know if anyone was following the payrolls, which is US employment. Most people are expecting the unemployment rate to go from 14 to 19%, pushed down to 13. There was surprise job gains, which is very unusual considering the unemployment claims that have been going up previously. So it kind of caught a few people off guard, and the market just took off, which is expected. So, you couple that with, it looks like the jobs are coming back to the US. Couple that with continued stimulus. There's still more talk of stimulus supporting small and medium-sized companies from the Fed for their banking program, whatever they've got, lending program. It all looks pretty rosy at the moment, and there's still, I think Trump is always talking about the numbers of COVID-19 cases coming down, but either way, the risk is on in the US, and it continues to be on with a NASDAQ, which is pushed to all-time highs. It's just gone past where it before the sell-off, finished above. G'day, Nathan. We've got the Dow and the S&P, although they are stretched. If they continue on the way they're going, they'll be up at all-time highs soon too. So it's don't fight the trend type of mentality, although it, to me, does not make sense. And I'm guessing to a few people it doesn't make sense also, but you don't try to make sense of the market. All you're trying to do is trade what you see. So what we're going to look at today is obviously trading opportunities where we see there could be potential, where markets could be stretched, where they could be heading to, just an overall macro view we're concerned with at the moment. It's not really looking at individual stocks or anything, but more of a macro view of what the market's doing, because I think at this stage, it's foolhardy not to look at what the overall markets are doing and what the macro themes are at the moment, because, if you're loading the boat here, I would say that's a low probability at the moment, and there's still concern for downside. Anyone that's been in the game for a while would know the same thing sort of happened in the GFC, bounced a lot harder than we thought, and that was the end of it until we got the major sell-off. So I'm not saying that's going to happen, but that's always in the back of my mind. The more people that disbelieve that it's going to pull back again, the more likely it will, because that's where, if everyone's loaded long, the easiest path of least resistance is down, because they'll all have to close out, and then boom, down we go. And there's more than enough fundamentals to support a reason why we should be selling off. So anyway, enough of that. Like I said, welcome, and if you like, or if you can, feel free to like us on YouTube. Join us on YouTube. We've got our Twitter. Follow us on there. You'll find it all on the website, www.tradesetup.com.au. Jump on there. You find the links down below, the different links to subscribe to. And if you do like what you hear, it'd be great if you can leave us a like and help us spread the word. Anyway, we'll get into it. So we're looking at the XJO, which is the ASX 200. Spoken about this quite a bit, expecting that to open up 150 points or so, 100 to 150 points. Now, it may be a bit capped on the open because there's still people looking to see it stretched, but we'll see. I still think it's could easily trade up to that 62.70 extension zone. And then we're looking at extension, so that's the first leg up. Sort of a correction. You got a big correction phase here, and if you take that from low to high, just extend that leg out, it takes us to 62.70. Now, it's not a seriously important level. It's just where we could extend to, where we could find that volatility leg up runs out of steam. Okay, so apart from that, if that's not going to hold up, then we've got these sort of higher level at 62, 65, 22, and then basically from there it's on to the highs. It's to all-time highs again. So we'll see how that goes. But either way, it should open up stronger. We've missed out on the Friday night session, and we missed out on the last night session, which we should make up for on the open. Looking at the Dow, look at the S&P, we can't argue that's stretched, but it's been stretched many times before. We stretched back here, had a minor pullback to the MAs, extended, minor pullback to the MAs, so we just keep pulling back to the MAs and extending higher. So like I said, that if you take probably, whether we can or not, whether we just see that low to high, where does that take us? It takes us into new highs, which, don't believe it would happen, but I didn't believe we'd get through this. I was actually looking for here to get a lower high, come into play here and press down, but instead we washed out the zone, didn't hold up. As soon as we dropped up, we pushed up here. If you're watching the market at that stage, and we started chopping around here, if I could just make that better, holding around here, you've got to turn bullish, because if you can't go down and we'll hover about around those highs and we consolidate, you've got to turn bullish and you've got to accept the fact that if you're bearish, you're wrong. Okay, it's as simple as that. And don't try to be right or wrong. Don't try to put your ego onto the market. Just try to trade what you see. That's the S&P. Look at the Dow. Much the same. Same sort of price action, and that's what we talked about. You can catch up. Talking about that for a while. That consolidation up near the highs, you'd expect higher prices. Nasdaq is just into new closing highs, so it's new all-time highs in the Nasdaq, which just keeps the ball rolling for tech. In all honesty, don't know where that's going to. We wouldn't have a clue. The market's up. So if you're buying a pullback, you're looking for a pullback, something like this, just to flush out some of these late longs, clean them out, it starts to rise again. Okay, it's worth a buy. All right, but until then, I think we're extended here. I just can't make myself buy at these levels. But you'd want to see how it comes when we pull back to the MAs as it start to get supported again, supported like it has many times before, and then look to buy. Over to copper. So we're looking at markets that are related to what the overall sentiment is, I guess. Now, copper supply demand, based around supply demand, as the market starts to open up, the overall global market starts to open back up again, come out of lockdown. Copper has just been running higher on increased demand expectations. Now we're pretty much back to where we were before the sell-off. This is roughly where we were in the Feb, had a bit of a bounce, spiked up, and then sold off hard. So we've made all that back, just about. Okay, so whether demand's increased or not is a different story. It's what the expectations are. So there could be a bit of profit taking. You would expect, whether we blow out that level, have a bit of a pullback, but either way, around that zone, so it's 2.62, I would expect some sort of profit taking from the bulls. But either way, everyone's loaded long at the moment, so there's a good chance. If something rolls over, as in the market starts to roll over, that's going to collapse. You would expect it to collapse because everyone is based long on that at the moment. So there's a lot of fuel built up on the long side to get squeezed out and to move down. But for now, it's extending up into that zone. Expect some profit taking, but it could just easily, remember that. It could easily just pull back, hold another high low, which is still a continuation trade. So that's copper. We'll get on to, we'll skip that, go over to gold. So gold, this is Aussie gold at the moment. So we're interested more in Aussie gold over here. Prices are pushing down. So obviously it's linked to the Aussie and gold. Prices are down, so that support around 23.93. It has traded there before. We've had this big push up, dragged in all the bulls, and then it just got capped at 27.50. And the Aussie sank like a stone, which has really put pressure on the downside to Aussie gold, or gold in terms of Aussie. Market sank and gold sank as well. So it couldn't hold up. We're just going to see now. If you're going to be buying into gold, you want to be watching to see what gold does, Aussie gold does. If it can start to hold up off this zone, which it's got every reason to, if it can start to find some buyers and pop up, that'd be great. So I guess it's going to, obviously, to do with gold as well. So if we look at gold, gold, this is not a key rising support. So it has broken down a bit, and we got that bit of a sell-off. So we've made back half of that, roughly half of that move down from, I think it was Friday night. Got knocked on the head. We've grinded away back yesterday and overnight. It is up around here. If it gets too much higher, I'm likely to believe that this support's going to hold. It's going to hold quite well. And we may, if we get up higher, we pull back and build a higher low, that's going to squeeze out any of the bears that we're pushing down. So at the moment, the market is range bound, between highs of 1750 and 1670, thereabouts. It could just chop around. There's a lot of gold. I think gold is getting supported more by a sell-off in the US dollar. So if we look at the US dollar in a minute, you'll see that that's towards support. So if we expect a bounce in the US dollar, you could probably expect maybe a bit of a sell-off back down to support into gold. But if the US dollar starts to bounce on concerns and it starts to rally hard, that's a safe haven trade, then gold could get lifted on the back of a safe haven trade as well. But again, it's struggling to find correlation as it normally does. So we'll keep an eye on that. But either way, if you just look at it purely in terms of what the price action is doing, it is starting to, this sell-off down here is starting to maybe fall apart. I didn't expect this kind of a retracement. I would have expected, if there's really some bearish sentiment, hold a lower level, not rebound so much, and then start to roll again and start to attack this level. But it's not, just grinding its way back up again, which it's done many times before. Expect a sell-off here, grinds all the way back. So if that kind of thing happens, you grind up and we come down and hold a higher level, say in here, that could be bullish more than anything else. Okay, so that's just a high low from 1683. So if we sort of come down, it's going to drag in some sellers because of what happened here previously. Anyone's been holding long and just held through this and watching this, and it starts to sell off again, they could just be exiting stage left, and then buyers start stepping into a higher level and sucker them in, and then it just trades back up again and squeezes out some of these shorts that start to build up. That's gold, Aussie gold. We've gone over that. Let's get on to have a look at the Aussie. So when I was talking about Aussie gold, you got to take note of what the Aussie's doing as well. Aussie's been ramped up quite hard, and it's a big bounce back from that sell-off. So when it's a risk-off tone, the Aussie can cop it. And now it's risk back on. You can see all the equity markets are rallying. It's sort of going lockstop with what the US markets are doing and what the equity markets are doing, and in a risk-on tone, risk-on, I'm trying to say. And you can see the prices are, pressing higher. Let's get something up. Sorry. There you go. Pressing high, but it is into a zone. I'm not saying that's a resistance zone. I'm not saying that something's going to happen there, but it's a perfect zone to potentially get some of these longs that are built up, squeeze them out. Whether we jam through them, we just keep holding. I mean, there's every reason why it could just keep holding higher lows. I guess your key level would be, let's go back here, key level would be somewhere down here. So it's got a bit of a room to move on the downside. It could contract, drag in a few sellers, expecting the market to topple over, but hold the anchor level to the upside, and then resume off a higher low and resume just to push straight up through 70.50. So that 70.50 is, you can see the previous highs, it's traded there before, around about the time when it started to sell off. So we're sort of regained all that lost ground from, say, February, March, from the sell-off. So in saying that, I mean, it is sort of a key area where, we could see some profit taking, but to go short, you need to see anchors broken and you need to see some serious weakness. So if we have something like this, that's what you'd be looking for. You wouldn't want to be, I should really make that a bit better. If that can understand what I'm saying, so this little rebound, bounce back up again after that sell off, it breaks down the anchor, we get this bit of a bounce, and then sellers resume the trend to selling. So anyone that's been loaded up here is starting to see weakness. They want out, they want to lock in some gains. You get some weakness at a lower level, and that's where you'd want to be entering short potentially for a big unwind of this leg up. So you're looking for that to unwind. You're not looking for just to try to nab the high. You'll want to see evidence that it's falling apart. And it's very important in this market to see your evidence first. You don't just, I can't just sell at a level like that. Sell at a level with my stop above, because more often than not, I feel like I'm going to get in and straight back out again as I get stopped out. The market keeps going because you've got no evidence that you're trading against a major trend. No evidence it's going to break down. So it's key the way you enter a market into this, especially when you're entering into something that's extended. So this is extended to the upside. You want to enter short. You've got to make sure that you've got evidence with a lower high or form of weakness to sell into. Otherwise, you could just be fodder for another rally. Okay, so the euro, it's still pressing higher. Expect that to press back up into this 114.50, through 114 at least, especially if the dollar can extend lower. And this is the dollar here. It's not a key zone through here, so there's not, it doesn't have to pull up there, but just been some buys reacted off that zone previously. In here, reacted up off that zone, reacted up off that zone. So somewhere around here, it could start to find some buyers. But again, I think that's more going to depend on what happened with equity markets. All right, so last one, we'll just look at quickly the pound. The pound looks like it's going to extend high. There's no real, this could be right where it is here. It may, find some selling pressure, but at the moment, this leg up off this low looks like it could extend all the way back up to 132. All right, so there's a lot of room to move potentially on the upside on the pound. So we might be looking for, if this pulls back and holds a higher level again, we could be looking for a long play. All right, so these are sort of things with our eyes on at the moment. We'll see how they go, and we'll have another chat tomorrow after tonight's action. All right, guys, thanks very much for joining me. I hope that was worthwhile. Like I said, if you can leave us a like on any of the channels, YouTube, Twitter, anything like that, it'd be much appreciated. Hope you enjoyed. Have a great day, and I'll speak to you again potentially tomorrow.